Hello again, fellow BeachBum traders. Thank you for joining us for our video about the Santa Claus Rally. In this video, we will explain what is the Santa Claus Rally, when can Santa Claus rallies occur, are Santa Claus rallies real, even during bear markets, and we'll look at what the stock market history says about Santa Claus rallies. Are they real, even during a bear market? And then please stick around to the end of the video and we'll talk about some trading strategies for how to prepare for a potential Santa Claus rally. And do we expect Santa Claus to be coming to the stock market this year? And again, how to prepare for a potential Santa Claus rally and going into the end of the year and into the new year. So again, thank you for joining us for our video on Santa Claus rallies and the Santa Claus rally. And again, we hope you'll find all this information useful about explaining what is a Santa Claus rally, and are they real, when do they occur, and how can you prepare for them, and the trading strategies you can use to make money trading a potential Santa Claus rally and hopefully succeed in your trading. So let's get started.
Santa Claus Rally, what is it, when can it occur? A Santa Claus Rally is a term used to describe the phenomenon where the stock market jumps in value during the last week of December and into the first 2 trading days of the new year. There are a number of theories as to why this happens, from tax considerations to investors buying stocks with their holiday bonuses. Macy's celebrates 88th annual Thanksgiving Day Parade at the NYSE. What is a Santa Claus Rally? A Santa Claus Rally is a seasonal stock market trend that often occurs near the end of the fiscal year. The stock market often yields positive returns during the last 5 business days of December and the first 2 business days of the new year, although this is by no means guaranteed. It was first observed by Yale Hirsch in the 1972 version of the Stock Trader's Almanac. Sometimes markets increase during each of the 7 days that are associated with the Santa Claus Rally period, though it can still be termed a Santa Claus Rally if the return is cumulatively positive over the 7-day period despite some negative market days. Some analysts view a Santa Claus Rally as a predictor of the performance of the market for the full upcoming year, although there is no clear evidence that such a relationship is anything beyond a coincidence when it occurs. While the Santa Claus Rally was originally defined as lasting just 7 days, some analysts and commentators tend to use the term more broadly to refer to longer time periods or even the entire month of December. Calendar anomalies such as the Santa Claus Rally may have statistical significance over a very long period of time, but still not occur the same way in any individual year, or not at all. Why does a Santa Claus Rally happen? Like the jolly bearded man it is named after, no one knows the definitive reason why a Santa Claus Rally arrives in December and often gifts investors with positive returns through the holidays. There are, however, many theories. Some believe that the rally is caused by the temporary bullish optimism of investors relaxing with family or from retail investors investing their holiday bonuses. There are also more general calendar trends called the holiday effect or the long weekend effect, where the stock market is theorized to perform better than average before holiday periods. This could be because lighter trading volumes during these periods make it easier for bullish investors to move the market. Others insist that the Santa Claus Rally is related to increased holiday spending. In fact, some analysts suggest that strong retail spending is seen as an important economic indicator of economic growth and promotes bullish buying behavior as a result. High year-end sales figures have a tendency to drive retailer stock prices up in anticipation of good quarterly returns. Both of these things are seen as having a domino effect on the rest of the market, leading to broad-based price increases. There are also theories that the Santa Claus rallies occur because institutional investors go on vacation over the holidays and aren't actively trading during that time. This theory requires the assumption that retail investors tend to be more bullish and, when able to exert a larger impact on the market, will cause stock prices to rise. Another theory is that investors are positioning themselves for the January effect, a separate calendar-based phenomenon in which some stocks demonstrate a propensity to rise more than others during the post-holiday period in early January. The January effect is believed to be the result of tax loss selling in December to lock in losses, followed by repurchases in January, in compliance with the 30-day wash sale rules set by the IRS for taking capital losses. Takeaway: the Santa Claus Rally is based on long-term statistics and theories about how investors behave around the end-of-year holidays, but cannot be assured in any given year, either in direction or magnitude. How frequently do Santa Claus rallies occur? Historically, the Santa Claus Rally has occurred 76% of the time between 1950 to 2019. According to the 2019 Stock Traders Almanac, the market has risen an average of 1.3% each year during that period. However, over the last 10 years from 2010 to 2020, the stock market only saw an average Santa Claus rally of 0.38%. In some years, the stock market has also declined sharply during the days in question. For example, from 2014 to 2015 the S&P 500 experienced a decline of 3.01% and from 2015 to 2016, that index declined by 2.27%. Those numbers illustrate the risk of investing based on calendar theories like the Santa Claus Rally. There is no way to predict if one will occur, and sometimes the impact is relatively minor or can even be negative. Also, because it is unclear exactly why the Santa Claus Rally occurs, it is impossible to predict whether those influences will recur in any given year. When does a Santa Claus Rally generally start? It is never possible to predict if or exactly when a Santa Claus Rally will take place, but the original statistics are predicated on a period that begins on the fifth last trading day of the year, which changes every year depending on what days of the week Christmas and New Year's Day fall on. That said, the media may loosely label what it refers to as a Santa Claus Rally that starts as early as Black Friday, the day after Thanksgiving, and continues throughout the month of December. This definition is much less scientific and should not be assumed to occur with the same level of statistical confidence as the original one defined by Yale Hirsch. Bottom line: the Santa Claus Rally makes for interesting news stories when the phenomenon occurs, but counting on it to usher in the new year is by no means guaranteed. Will Santa Claus visit the stock market this year? The history of holiday rallies. Key points: historically, during a Santa Claus Rally, the S&P 500 has risen an average of 1.3%. During the Santa rallies that have taken place during the last three recessions, the S&P 500 has spiked an average of 3.8%. What is a Santa Claus Rally? The phenomenon, given its label by analyst and creator of the Stock Traders Almanac Yale Hirsch, generally takes place during the last week of December into the first few days of January. Some years, the rally has taken place over an extended period, beginning December 14 and lasting over 2 weeks. Historically, during a Santa Claus Rally, the S&P 500 has risen an average of 1.3%, but it doesn't happen every year, so it isn't 100% predictable. Past Santa rallies: between December 20, 2021 and January 4, 2022, a Santa Claus rally caused the S&P 500 to surge 4.98%. The year prior, between December 1, 2020 and January 4, 2021, the ETF spiked 2.43%. Between 1960 and 2020, Santa Claus rallies happened about 66.66% of the time. Since 1993, the occurrence took place 67% of the time per Stock Traders Almanac. What's interesting is that during bear markets and economic downturns, the rally can be stronger. Bear markets: a bear market is generally recognized when the S&P 500 declines more than 20% from the high of the previous bull market. This year, the S&P 500 officially dropped into a bear market the week beginning May 16. Santa Claus rallies in bear markets: a look back at the last three bear markets, beginning in 1990. The three-month-long recession that occurred between July 1990 and October of that same year saw the S&P 500 plummet 20.14%. That year, traders weren't gifted a Santa rally and the S&P 500 declined 6.27% between the weeks beginning December 17 and January 7. The bear market that started in 2000, which was brought on by the collapse of the housing market, lasted a whopping 33 months, occurring between January 2000 and October 2002. Over the holiday period, between December 26, 2000 and Jan. 2001, the S&P 500 spiked up 2.62% before continuing in its downtrend. The following year, between December 17 and December 31, the ETF rose 4.47%. The Great Recession, which lasted for 17 months between October 2007 and March 2009, saw two Santa rallies take shape: a 1.32% jump during the week beginning December 17, 2008, and 6.81% surge higher over the course of the week beginning December 29, 2008. Theory behind the phenomenon: a number of catalysts may contribute to the rally. The end of tax loss selling season, which begins during the fourth quarter, where traders and investors sell losing positions to minimize capital gains from profits in the stock market, the housing market or other income sources. The receipt of holiday bonuses that traders and investors may decide to invest because the bonus is viewed as extra money. A period driven by retail traders, who generally have a bullish bias, while Wall Street investors have largely left their desks for vacation. The expectation that a rally will take place, which causes a high number of traders and investors to buy stocks, resulting in a self-fulfilling prophecy. The look at the odds over the course of the last 3 recessions. There have been 5 holiday periods and a Santa rally has taken place during 4 out of 5 of those periods, 80% of the time, beating the 66.66% overall average. Out of those 4 times that a Santa rally has occurred, the S&P 500 increased an average of 3.8%, beating the overall average of Santa rally spikes by 2.5%. Correction, December 5, 2022, the bear market that started in 2000, not 2020 as originally written, which was brought on by the collapse of the housing market, lasted a whopping 33 months, occurring between January 2000 and October 2002.
We talked about tax loss selling and profit taking, which is all end-of-year accounting, particularly for large fund managers, hedge fund managers, etc., and institutions. There's discussion that this should wrap up the week before Christmas. However, we may get a large glut of institutional tax loss selling all at once, or profit taking. They may be waiting for an opportunity, so you might see a large volume of selling hit all at once in the next week or so. So please be aware of that. If you see, if it's a company at a loss for this year, you see a lot of volume coming in, it's going to really put downward pressure. Again, anything that's way up this year is vulnerable to companies taking their profits. Again, this is all to make their books look good, reduce their tax exposure for the end of the year. That should all wrap up hopefully by the week before Christmas. So let's also talk about the Santa Rally. You'll hear discussion of the Santa Claus Rally. We're going to talk about this in more detail next week. What is the Santa Claus Rally? It's the last week of December through the first 2 trading days in January. I've got this link up to this article in Investopedia that describes the Santa Claus Rally in more detail. We will review this article in more detail next week, but I just wanted to give you the reference to it and talk about preparations. So what the expectation is okay, we have downward pressure due to tax loss selling and profit taking. And then the expectation is for a Santa Claus Rally the last week of December. So this tends to be a very good opportunity to buy the bottoms, as these stocks that are heavily beaten down over the next week or so, if they are good companies, not broken companies, just a broken stock, and they're of value, this is a great opportunity to fulfill your shopping list in preparation for Christmas, right? So hopefully we've got your Christmas list ready, and when you see the opportunity and these guys value stocks bottom and are preparing to turn up into the Santa Claus Rally, that's your opportunity to scoop them up. So it's important this week to have your shopping list ready. Be prepared to buy those value stocks that hit bottom due to this downward pressure, and hopefully ride them up through the Santa Claus Rally into the end of December and the first part of next year. So again, we'll talk about Santa Claus Rally more next week, but we want you to, this week is the week to prepare and buy those things that are going to benefit from the Santa Claus Rally the following week. Finally, Be ready for news of further variants. If we start to hear um, additional variants hit the news, be prepared for the seesaw action. Please see our list of lockdown and reopening plays in the comments of the last couple weeks of game plan videos. We've also posted on our Facebook group. We expect more variants. There's no reason not to expect there won't be more variants, more seesaws of lockdown reopening reactions. So once it hits the news, expect a reaction. Also, as a bonus for viewing these weekly trading game plan videos, we've got a couple other videos that we produced and not yet premiered, not yet published yet. One's on how to prepare for trading while traveling, and another is how to use the Gartner hype cycle for your stock trading. We talked about that in a previous weekly game plan a little bit. This is a much more detailed video about how to use the hype cycle for your benefit going forward. So I'll put the links to these in the description box and potentially in the comments so that you can view them. They're unlisted right now. We'll be premiering them as we have the opportunity to do so. So we hope all this information helps you go select the stocks for your shopping list for this week, for your watch list, as we will be doing, and then please come back and join us for part 2 of this weekly game plan for December 13th through the 17th, and we'll tell you what stocks we are adding or removing from our watch list for this week, and our price targets, strategies for trading those stocks for this upcoming week. So again, we hope this all helps. Please let us know in the comments below. Feedback on this information. Was it helpful to you? How can we improve, etc.? And if you're not already subscribed, we hope you will choose to do so. If you like this type of information and it's valuable to you, please smash the like button. Help the YouTube algorithm share this with additional of your fellow traders out there. And please share this with your friends and fellow traders. We appreciate your time. Thank you for watching, and we'll talk to you again soon. So first, let's talk about the Santa Claus Rally. I know we've mentioned it for a couple weeks now already and tried to prepare for this Santa Claus Rally, and it looks like this year it may have come a little bit early, which is great. And let's talk about, what can we expect and how long will this last, and how do we ride this Santa Claus Rally. So here's the article in Investopedia. I'll include this link in the description box below again. We've had it there for a couple weeks, so hopefully you've already read this article. It describes the Santa Claus Rally describes a sustained increase in the stock market in the last week of December through the first 2 trading days in January. So this year that would be the 3rd and 4th of January 2022. Again, this year it appears that our Santa Claus Rally is actually starting a little bit early, and we started this week, which is not technically the last trading week in December, which is our week coming up. So we should expect historically a good Santa Claus Rally this week. So we'll try to prepare for that. You'll talk about, they talk about, why does this occur? There's numerous explanations, tax considerations. We expect that the tax loss selling has already occurred, and so we don't have that downward pressure anymore, and people are positioning for the new year, for the next year, and we'll talk a little bit possibly about the wash sale, what that means, and why that may affect us. So, and then the other thing is just the sentiment, the sentiment of the holidays. The markets tend to rally, optimistic. 2/3 of the Decembers dating back to the 1960s have resulted in a rally. So historically, the probability is very high that we get a Santa Claus Rally. It's never guaranteed, but again, something we could have a black swan, or the pandemic stuff could Grinch our Santa Claus Rally, but that's not to be expected. So we're going to expect and plan on a Santa Claus Rally, and but we will be nimble and adaptive if things do turn Grinchy on us. So then after this, we'll talk about the January effect going forward. You can see it points to value stocks outperforming growth in December. So we'll look at that, and again, you can read this in more detail. The cause, optimism, is it real? Again, statistically, this has been historically shown that it's a real effect, and will it occur this year? Again, traditionally it's the last 5 trading days of the year and the first 2 trading sessions of the new year. So that would include this upcoming week and January 3rd, 4th, or the first week of January. So again, we're expecting a rally, we expect value, we expect tax loss selling to have abated. How do we position to take advantage of this rally? And that's what we're going to look at and talk about in this weekly trading game plan this week. Thank you again for watching our video on the Santa Claus Rally and watching our video to the end. We hope that you found this information helpful in explaining what is the Santa Claus Rally, when do Santa Claus Rallies occur, are Santa Claus Rallies real during in general and in particular during bear markets, and what does the stock market history say about are Santa Claus Rallies real and do they occur during bear markets? And we hope we provided you with some trading strategies to help you prepare for a potential Santa Claus Rally. And also, is Santa Claus coming to the stock market this year? So we hope this all helps you make money in a potential Santa Claus Rally as in going into the end of the year, into the new year, and succeed in your trading career. We hope that you like this information. Please smash the like button to help the YouTube algorithm share this with more of your fellow traders around the world. Please share this on your social media with your fellow traders and friends to help them also succeed in their trading. Please leave us a comment as to what you think about this information. What do you think about Santa Claus rallies? Do you think they're real? Do you think a Santa Claus rally is coming to the stock market this year? Why or why not? And again, let us know in the comments below in our free Discord. You can find an invite to our Discord in the description box below, in our Facebook group, and also feel free to contact us via any of our social media sites, links to which you should find in the description box below as well. And again, we hope this all helps you understand what a Santa Claus rally is and the trading strategies that you can use to help to potentially prepare for a Santa Claus rally, make money in a Santa Claus rally, and throughout the rest of the year. And good luck and have a great trading week. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch lists, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. BeachBum Trading also now has a site on Patreon. If you are willing and able to help support our efforts to produce all the content and help you achieve the financial freedom you want, deserve, to be able to live the BeachBum lifestyle or any other kind of lifestyle you would like, and you're willing and able to help support our efforts in these regards, we hope you'll choose to visit our Patreon page. You can get access to our new BeachBum Trading Community Discord server, which is currently under construction, but you will get access to the Discord server by supporting us through Patreon. Again, this is all currently under construction, but you can see we just have the default levels, membership levels, but again, each level allows support, allows access to our Discord. We're also posting our trade positions initially in our Discord, and again, we greatly appreciate any support that you're willing and able to provide. So thank you for your consideration. Another way that you can help support BeachBum Trading and being able to produce frequent quality content for you for free on YouTube, etc., is in addition to subscribing to our BeachBum Trading channel, hitting the like button on our videos, and hitting the notify so you're alerted when we release further videos. You can also choose to show your support for BeachBum Trading with a super thanks, which you can find below this video. If you hit the heart with the $sign, the super thanks, again, you can financially support BeachBum Trading in whatever amount that you wish, and we greatly appreciate your support, and that will help us, again, be able to produce frequent quality content that we can provide for you and all your fellow BeachBum traders around the world for free on YouTube. So again, we greatly appreciate all of your support, and thank you very much. Thank you again for watching our video. We hope that you liked it. If so, please smash the like button, give us a thumbs up. If you're not already subscribed, please consider subscribing to our BeachBum Trading YouTube channel. Please share this video with your fellow traders and friends. And please give us your feedback and any recommendations for improvement in the comments section below. And let us know what else we can do to help you in your trading career. Thank you again, good luck, and have a great trading day. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.